A wise, clear-sighted vision rooted in the belief that national strength and prosperity are built through deliberate planning and future-focused decisions. Under the leadership of His Majesty Sultan Haytham bin Tariq since assuming the reins of governance, the supreme focus on strengthening the national economy has translated into an integrated framework of national policies, redefining Oman's economic trajectory on firm pillars and yielding tangible results reflected in positive growth indicators across multiple sectors. That vision was transformed into action with the launch of the 11th Five-Year Development Plan, a clear national blueprint for sustainable growth. The plan sets a 4% real growth target, anchors price stability with inflation held below 2%, and accelerates non-oil growth and private sector investment through 3 strategic pathways, driving diversification and economic empowerment. This national trajectory is further reinforced by the unveiling of the state's general budget for the fiscal year 2026, announced in parallel with the implementation of the 11th Five-Year Plan. Total revenues are estimated at around 11.5 billion Omani riyals against public spending of nearly 12 billion. The projected deficit stands at approximately 530 million riyals, down by more than 14% compared to the approved deficit for 2025.
Oman today has only 35% loan to the GDP, and I think that is acceptable worldwide. And now it is a second phase, that how to implement the infrastructure, how to add more to the infrastructure, how to invest in other projects in Oman through Ministry of Finance.
These results build on a solid foundation laid during the 10th Five-Year Plan, where program implementation reached 97%. Strong indicators across sectors reflected the scale of sustained effort, delivering notable economic growth and reaffirming the effectiveness of a balanced, diversification-driven approach, with non-oil sectors emerging as a central pillar of the national economy. By constant prices, non-oil activities accounted for over 73% of gross domestic product. The added value of non-oil sectors reached nearly 21 billion Omani riyals by the end of the third quarter of 2025, compared to just over 20.4 billion Omani riyals during the same period of the previous year, marking growth of 3.4%. Alongside growth, continued efforts to reduce public debt delivered further gains, with total debt declining to about 14.1 billion Omani riyals by the end of the second quarter of 2025. These indicators sent a strong message of confidence to international institutions, culminating in the Sultanate of Oman's return to investment-grade status following Fitch's upgrade to BBB negative with a stable outlook. That confidence extended into domestic markets as the Muscat Stock Exchange recorded historic trading levels, with market capitalization surpassing 32 billion Omani riyals. The main index rebounded to levels last seen in 2016, underscoring renewed investor confidence and market resilience. In a clear signal of Oman's growing attractiveness, foreign direct investment continued its upward trajectory, supported by improving economic performance and the positive impact of the credit rating upgrade. In a clear signal of Oman's growing attractiveness, foreign direct investment continued its upward trajectory, supported by improved economic performance and the positive impact of the credit rating upgrade. By the end of the first half of 2025, total foreign investments exceeded 30.2 billion Omani riyals, an increase of nearly 12.8% compared to the same period a year earlier.
Now a lot of foreign investors are flying to Oman, investing in Oman by signing a lot of free trade agreement with Oman. And these all is supported by the government, and that going to enhance and to add a lot to the economy.
An economy built on clarity of vision, sound governance, and disciplined reform, reinforcing Oman's position as a stable, trusted, and forward-looking destination for growth, investment, and opportunity.